Morning, everyone. Kris here from the Mindbloome Exchange, and today we are looking at top 3 chart patterns every trader should master. What are those? Well, those are the bull bear flags, double tops or double bottoms, and of course the head and shoulders or the reverse head and shoulders right away. So let's just jump into the head and shoulders pattern. As you can see, this is a reverse head and shoulders pattern. And what does that look like? Well, in the Euro USD, it looks like a little head was made here, which is this zone right here that was made in the first shoulder. And then the head was created, which created a little bit more depth, I guess you could sort of say, on price action. And then it reverted back into that level of support and resistance up top. We created a neckline right there. And as soon as it crossed the neckline, what happened? Well, Bob is my uncle, and we went up. Perfect inverse head and shoulders pattern right there. Notice how that neckline acts as a key support or resistance level. Once it's broken, the price definitely significantly moved, right? So the entry points and the exit points on here as well. If you were to trade such a pattern, well, you'd have your neckline. We're getting a little bit more in depth here. Let's just go like that as such. Let's raise that neckline a little bit up. And personally, if it was myself, I'd put my stop loss here. I would have entered just above here. And yeah, I would have, that's what I would have done in that manner there, you know. So I would have bought in there just above this. We just squeeze in a little bit just above this high price action here, and nice little entry point at 103, and we've a nice drive up to 104, possibly higher levels going in the future. Now let's jump over to our double bottoms, double tops. We're going to use USD CAD for a double bottom. And what we're noticing here with a double bottom is with a double bottom, all it really is, it's a W or an M. And once it breaks the M pattern or the W pattern, the consensus is on the W, we will be driving up. On an M, we will be driving down. Now, we spotted a wonderful, easy to spot W pattern or double bottom. We found our bottom and our bottom here, and from there we've made our top. So if I remove these levels here, so you can sort of see what it looks like without my drawings, right? It sometimes gives you a better frame on what to look for. Perfect. As you can sort of see, our first bottom is here, our second bottom is here, right? And then this is our, I guess you could say, our top up there. And the market broke this top here. And how would have I entered this market? I would have put it on the tops like that, as such. Maybe a little bit higher. And personally, my stop loss would have been here. We'll just label it red. My entry point would have been here on that green. That didn't appear, so let's just do it again. Something like that. And then the stop loss would be under. You could have done a tight stop loss here, right here. if you're really aggressive, but you would have been possibly kicked out of the market, or you could have done another stop loss right here. Or if you're being really, really safe, and you're really wanting to let this run, you could have done another stop loss right here. So that's how I would have looked at the market here with this double bottom. Quite easily, the market came down, we waited for it, came up, and then went back down, and then now it just drove up nice, smooth, and easy. So that's what I would have done in that situation. And then now let's talk about bullish and bearish flags. Let's jump over to the USD yen. Perfect. And as you can see, we've spotted two bearish flags. What bearish flags are? It are continuation patterns for riding trends. As you can sort of see, it shows a sharp trend followed by consolidation zone resembling a flag. As you can sort of see, if you take your channel, you make a wonderful channel as such. So if I remove this here and you find the bottoms and you link those bottoms together. So we take our bottom here, we link it with the next bottom, and the next bottom as such. We may not get all the bottoms, so don't be upset with that too well, but you want to sort of get the base core bottoms there in that manner there. And then what you're going to do, you're going to right click if you're using TradingView, clone. And then what you're going to do is go back to the base here. And you can see it how the market has touched here, here. And the more times that the market has touched something, the higher the likelihood that that zone gets respected. And what happens here? The market just plummets after it breaks here. Now the question is, where would you enter? If you saw such a bearish pattern, where would you enter, Kris? Well, I would probably be entering, if we zoom in a little bit further, let's go a little bit further here. And that's exactly where I'm happy with. Yep. And it broke here. Then my entry point probably would be below this price action level right here, below this low. And then let's do that again. One moment. Having technical difficulties. So, right. So we go below the low here. Simply, why are you not staying? There we go. And then our stop loss would be here. So stop loss would be above this high right here. And then our entry point would be right here, just below this base on this low here. And then from there, we would ride it. We would ride it and ride it and ride it. And then we would use our take profit strategy on how to get out of the market when that time is to come. Now we're going to look at another USD yen. As you can see, we marked out our first bottom, our second bottom. So there isn't too many bottoms on this one. Support, you could call it support as well, right? We have 1, 2 levels of resistance and 2 levels of support. Now, in this trade here, more risk inadvertently. And with this entry point here, being that we go here, the entry point would be on that bottom, just like that. At the same time, our stop loss would have to be above that high right there for us to sort of validate what's going on here. That's what I would do in this situation here. And as you can see, the market is broke down, and at the same time, market has corrected. So if you didn't have your stop loss here, you would have been kicked out of the market. As your entry, you would have been in a loss position. So always, always, always make sure your stop loss is in the right position, in the right area. And as we're seeing this now, the market is driving down, possibly further down. That is an idea. We'll have to validate that in the future. Thank you so much for your time. And like I said, these three chart patterns can give you a real edge in the market. Which one do you like the most, or do you use the most often? Comment in the section below. And yeah, drop your comments. And don't forget, like, share, comment, boost if you found this useful. The goal is to give you useful content that you can use right away in your trading. Take care. Have an awesome, awesome day.